125 early because right now silver is running and silver is sitting at a cool 121.775. That's unheard of. Now, I've got a cousin who I tried to get on here not long ago. He's on the up and ups on this Fibonacci stuff. Now, I know what Fibonacci is, golden ratio, found in nature everywhere. I understand what Fibonacci is. But, when you draw that spiral and you try and figure out how far out the next little run is going to go, I'm not so sure on that. But I do know what he said. He told me that the first major milestone is going to be 125 for silver, which we're sitting at 120, almost 122. Then he said the next major milestone will be around 148. Now I can't remember if he said after that or before or after this coming 125, but at some point there's going to be a hell of a crash all the way down to like the 60s and 70s. And once all that happens, once you see silver make a major crash down to about 70, set those longs up, buy a bunch of contracts because it's going to run to 200 from that moment. But it has to cross 148 first. So I'm assuming the 148 mark comes, then we have a correction down to 70. Everybody's going to freak out and die. Hold tight. Take everything out at like 138, 140. Stop right in that range when it gets to be too good to be true. Like when's this run going to stop? Kind of like the day before yesterday when it ran to 117 and then fell all the way back to like 106. Yeah. Put your stop losses in, trailing stop loss if you want. That's probably the best idea. And yeah, don't lose any money if you can help it. But 120 is 125, 148, and then 200, baby. We're in uncharted water when it comes to silver. Nobody knows where the top is because we've never been here before. If you see any of these internet guru morons putting lines up saying, well, it's going to go above this, there's support and resistance up there. No, there's not. There's none of that because silver's never been there before. There's no resistance. That's the only resistance you're going to find is psychological resistance. Is wherever it slows down, people are going to be like, oh, there's resistance. That's not necessarily going to become support once it crosses it, which is usually how that happens. Usually you cross the line of resistance, it becomes support, right? That's just the way it works. Don't count on those rules when it comes to silver. Those lines that is made as it goes up are nothing. Because if it decides to crash, it'll go right through that. It'll slice right through all that like butter.
Did it crash down?
The silver is cooling off a tiny bit. It went down to, well, as I was talking, it went down to 120, but now it's back to 121. So we might be seeing that 125 today. In fact, as soon as the market opens, as it is right now, we will see other things jumping around. So, off to the stocks. I see lots of green. Apple is green. Adobe's red. Agri Realty is in the green. AGNC Investment is in the green. AIQ is in the red. AMD is in the green. Amazon, red. ARC 21 shares Bitcoin ETF is in the red. AST Space Mobile in the red. Avco Broadcom in the green. BlackRock Capital Allocations in the green. They usually are. BitU ProShares Ultra Bitcoin ETF in the red. Everything Bitcoin related is going to be in the red right now because Bitcoin is sitting, well, with a short signal to boot, it is sitting at 87,666. So Bitcoin's having a little bit of trouble right now, but that's okay. It will recover. It's having this trouble because of the silver mayhem that's going on. Nobody cares about Bitcoin at the moment because silver is knocking it out of the park. And, my calls are doing insane. I've got an SLV 91 call. I am up $700. It is now worth $2,200. My Nvidia call is up $300. Is now worth $1,500. My Apple call is now up $169, which and now is worth $1,643. I had a CVS call that was up, and it looks like it just the bed. And then I have an SLP $50 call, which hasn't done much of anything, even though we've had this hell of a silver run. So I'm going to be pretty much focused on silver today, watching what it's doing, because I have a stop loss set at 125 because I believe in Fibonacci. Fibonacci is never wrong. So, how about some more good investments? How about some more people in the chat? I see nobody watching, which sucks, but hey, you gotta build a following, right? That's how this works, and that's fine. If you like my analyses, you like my analyses. If you don't like my anal ISIS, then, you know, what can I tell you? I guess I better get a better anal ISIS. I've got a couple of longs on Bitcoin as well. They're sucking it. But that's okay. The liquidation on my Bitcoin longs are something ridiculous, like 20,000. So I'm just riding them out. One day they will profit. Probably won't be today. I think I bought in on them at 88.9. So they're down like hell. I bought them even though they were on a short signal, because a lot of times the signals you get for Bitcoin are wrong. Quite a bit of the time they're wrong. I'm not convinced that there's any signal provider out there for Bitcoin that knows what they're talking about. So I'm going to be out here breathing smoke because it's so delicious. Silver pushing 120. Let's see if I can get a split screen going here with silver and all the rest of my investments. All right, das ist gut. It looks like silver is still hanging on to that so that 120, well, it came to 119, 119.4, 119.35. Is it over? Is it crashing? See, if you have a stop loss in, it wouldn't matter. You set your limits, you walk away with what you want to walk away with. Right now, I should probably have a stop loss in. Actually, I do have a stop loss in. My stop loss is set, and don't take my advice. I'm just scared, so I put a stop loss pretty high up. Oh no, I didn't. I put a stop loss at $1,000, which means it won't ever stop. But I put the take profit at 125. I should fix that. Put my stop loss in at 125. And I'm going to put my, I put my take profit at 125. Putting my stop loss in at 118 would yield me negative 75 cents. Yet no. $119.50 will give me $75. Yeah, we're gonna. Another quarter. Makes it $86. If I put my stop loss in at 120, I'll walk away with $400. But then I miss out of any of the jumps and bounces it's going to do. So I'm going to set myself up at 119.50. I'll take 75 return. That gives me $1 to play with while it runs up to $125. All right. Silver call running. NVIDIA and CVS. My CVS call is back up $65. Not sure what CVS is doing, but NVIDIA is what's concerning me. I wonder what's in the news for NVIDIA. Let's see. Let's find some news in NVIDIA. All right, the Motley Fool. NVIDIA. This company just made a big move, and here's what it means for investors. This is from the Motley Fool. I am reading it verbatim. All credit where credit is due. Motley Fool is pretty good. Key points: NVIDIA's new $2 billion investment in CoreWeave adds to its existing stake. It helps funnel GPU demand to NVIDIA and protects its market share. It's a wise strategy, even if it's not a game changer for NVIDIA. And then they have 10 stocks they like better than NVIDIA. Sorry. They're kind of the kings. Like, you can look at on crypto.com, they've got where the betting games that they have, where you just straight up bet on what company's going to do what. NVIDIA is at the top to be the largest company in the world, and the bet is by June. I threw $100 in it. If they're the top company in the world by June, then I get $300 back. Okay. If not, I lose my $100. Man. This AI leader continues to back one of the fastest growing data center companies. NVIDIA is a key cog in the ongoing data center investment cycle. Most AI hyperscalers use NVIDIA's GPUs to train and run artificial intelligence in massive data centers. This is nothing new. This is what NVIDIA is built on lately. Yes, the same NVIDIA that builds your graphic cards, the same NVIDIA that makes graphic cards for Bitcoin miners, the same NVIDIA that provides all of these things for many little subgenres. So, yes, they're one hell of a company. Recently, the company announced a new $2 billion investment in CoreWeave, which specializes in building AI factories, specialized data centers. It then rents computing capacity to AI companies, including OpenAI, Meta Platforms, and many, many others. Could this new investment pump NVIDIA stock? I think it will. In fact, I do believe it's responsible for the pump I'm receiving on my NVIDIA call. And just in case you don't understand options is you're betting on what the price will be. It's literally gambling. But it's gambling with a whole lot of information to help you decide and make your choice. So while it may be gambling, it's, I'd say, gambling with advisement. Like, you don't often sit at a blackjack table and have some guy whispering in your ear, there's only three more kings left on the table, or we've all seen these cards that are now upside down. If you forget, you know what I mean? You don't see none of that in Vegas. Since CoreWeave's data centers use NVIDIA GPUs, any business this company does with AI hyperscalers also means it is doing business with NVIDIA. In other words, it helps NVIDIA's AI market share. The ongoing data center boom feels like a technological arms race. That's because it is. The immense investment is driving remarkable growth for CoreWeave. Analysts analysts estimate that CoreWeave's revenue will skyrocket from 4.3 billion over the next year to 12 billion this fiscal year and 19.5 billion the following year. That, ladies and gentlemen, is what we call exponential growth. 4 billion one year, 12 billion the next, 19 billion the next. But that's how you sustain growth. Now, it becomes unsustainable when the market itself flattens off a little bit, and then investors don't invest as much anymore, or the company doesn't generate as much profit as it used to generate. But dude, Nvidia has got so many things. I mean, we all know the nature of computers and how we know what the controlled obsolescence is. We know how, if you buy a part for a computer, namely a video card, a year later they're going to have some more bigger badass card that you got to have, and then we work with the gaming companies, so the gaming companies produce higher quality visuals in their games to where you have to have these newer and updated cards. If you're 5 years behind on your cards, chances are you're not running Cyberpunk on your computer. And this has always been my argument for consoles, but we won't get into that here. I know people are very passionate about console game playing versus PC game playing. Yes, there's many things you can do with the PCs you can't with the console. Yes, consoles don't go out of date so fast as computers do. Yes, consoles are more compact and easier to deal with. Yes, computers you're part of the machine, and your performance is just going to be better, of course. But none of it is that much more remarkable to warrant the money that needs to be spent to achieve those things. That's my opinion. Now, another layer to this NVIDIA's upcoming Rubin chip. CoreWeave proves itself. Excuse me, I just woke up and my mouth feels like I got a mouthful of marbles. Looks like silver fell below my stop loss. That's fine. CoreWeave prides itself on its data center engineering, which it builds with future hardware in mind. NVIDIA recently entered full protection for the Rubin AI chip architecture, and as CoreWeave grows, it could help NVIDIA launch Rubin in future chips more efficiently. It could still be extremely early in what appears to be a generational investment boom. AI is still becoming more intelligent, and real-world adoption is only just beginning. These two trends both translate to more energy and chips to make it all work, and NVIDIA will definitely do that. Not financial advice, but buy the living hell out of NVIDIA and buy some NVIDIA calls too. Make them about, a month or two out, and if you can afford it, try and go in the money. Those will guarantee to pay unless something wild happens in the market and NVIDIA just starts sucking it. Speaking of sucking it, silver is about to fall below 119, which I'm glad I set that stop loss. Mm-hmm. Looks like it's teetering. We are going to go look at Trading View. I love Trading View. There's a link to everything, every program that I use in the description. In fact, I don't think there's one for Trading View, so I'm going to put a referral link in our description right now. Where is YouTube Studio on this dumbass app? Let's see our current stream. I can't do nothing with it because I need YouTube Studio. There we go. I'm putting a link to TradingView. I don't get anything out of it, but you should be using TradingView for all of your trades and all of your market assessment. Webull has a pretty decent setup when it comes to charts and whatnot, but I like TradingView because of what you can do with it. You can look at everything on TradingView. Like you can look at the charts for silver futures. You can look at the chart for Bitcoin perpetuals, all cryptos perpetuals. You can look at the charts of regular old stocks, commodities, futures. You can look at the price of beans. You can look at the price of oil. You can look at the price of natural gas. It's amazing. It's a great, great, great app. I love TradingView. I paid for a year so that I could use certain indicators. They've got indicators out there with buy and sell signals. So if you're a day trader, and you like high frequency trading, they have chart settings all the way down to 1 second intervals, 1 second candles. That's a little insane and nerve wracking, but they have the 1 second, 2 second, 3, 5, 10, 15, as well as the minutes that go from 1 minute to 2 minute candles, 1 minute candles, 1 minute, 2 minute, 3 minute, 5, 10, 15, 30. Then they got 1 hour, 2 hour, 3 hour, 4 hour. And then of course they got a day, week, month, year. It's pretty wild. And then you can stretch the chart out all the way to the beginning back in 2009. Yes, they have every bit of the data there. It might take you about 10 monitors strung along to visualize it all without it being all jump full of candles. And then the range, of course, is mind-blowing. So yeah, I'm adding a link to TradingView in the description. It monitors crypto, then stocks, crypto, futures and derivatives, commodities, you name it. I do not profit from this one. I'm simply providing it to you because I want you to have the best tools in your arsenal. Or fix on the words because this tablet doesn't type well. What the hell is that? Back to TradingView. Get the copy of the share link. Share the link, baby. Share the love, baby. Share the love. Boom. I separate my links by one line, just so people don't get them confused with the lines ahead or below, so there's no confusion. I don't think anybody minds, considering we have 0 people watching. I'm trying to provide a service. Nobody cares. That's alright. That's alright. Good thing about these YouTube videos is you can go back, can't you? You can go back and take a look and see where you screwed up and see what I warned you against and see if I was right. I'll certainly be making clips of when I was right and posting them, sort of like a nanny boo-boo, stick your head in doo-doo moment. Because, you know, I'm petty from time to time. Especially when somebody tells me I'm wrong, I can't wait to prove them wrong. Because don't you ever doubt me. I do my best not to say anything that I don't already know the answer to, you know, because I don't know about you, but I hate being wrong. So I do my best to avoid it. Right, we have a referral for PHEMEX. Now, if you're not familiar with PHEMEX, you must be careful. If you're a noob, trading derivatives is new to you, you can make a lot of money with PHEMEX, but you can lose a lot of money in like 3 minutes. I just tested it out once to see how much and how fast I could lose 300 bucks. It was gone in 30 seconds, bro. Apparently, I can't do a referral line for that. Oh well, who cares? Alright, so, or you can buy me a coffee or you cash at me. I prefer the Cash App. It's quick, it's instant, there's no fees. Buy me a coffee takes like 40 to 50% of the fees. You send me $1, I'm going to get like 40 or 50 cents of it. We tested that one out. Tested out with $10. Yeah, I think it was actually more than that. I think they kept like 70% or something wild. I don't know what. I have no idea. So I do not suggest using Buy Me Coffee, but hey, you're more than welcome to use whatever format or whatever donation you want. Buy Me Coffee, Cash App, Venmo. You can donate Bitcoin straight to a Bitcoin address that I've got listed in the bottom there. That's great. Or you can do it like a normal person through Super Chats, especially if you've got a question. If you've got a good question and you want it answered, that Super Chat will put you at the top of the list. All right, boom. My what do you call it, is in the description. My Trading View link is in the description. Go get you some Trading View, baby. It's glorious. It has been such a helper when it comes to figuring stuff out, especially with some of the signals that I've got. The buy and sell signals are great. They're really great. Still, don't count on anybody's automated buy sell skills, any of those bots. Don't count on them. Don't put all your money on them. Still watch the chart. It doesn't mean that you can turn on the bot, walk away, and come back a millionaire one day. It's not how that's going to work. Bots are right I would say on a somewhere between 17 and 60% accuracy, and that is a sliding scale, which means the one bot could be 60% accurate for a month, and then the following week 16% accurate. They're constantly being tweaked. Market conditions marketing conditions are always changing. That's why it's so hard for these bots to keep up, because every single pattern that they build, pattern recognition, doesn't last very long. Now, your classic patterns, like head and shoulders, and wedges and flags, it sees those and it understands what they're supposed to do. They analyze them a little bit deeper, and yeah, a lot of times when it's outside of a pattern, they will put down a buy or a sell signal at some arbitrary place just because it's been going up. And I've seen it go up, and then like go up. There's like four candles up, and they'll put a long entry, and then the next two candles will be down, 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 down. So analyze the chart yourself. Don't just trust a bot. I have my bots there just as a way to see, how accurate they are, and to see if I'm wasting my time with the bot. 9 times out of 10, I tend to follow what the bot says, unless it's been too long. Like if you don't react immediately to what the bot says to do, you might lose. And don't dare trade on 1 and 5 minute candles, please, guys. Don't. That's the easiest way to get wrecked. Trade on 15-minute candles. In fact, the most effective bots are locked in on 15-minute candles, and that's what they go by. However, at the same time, on a 5-minute chart, you've got more warning. If something's going to switch, if something's going to reverse to the downside, then you won't hear about it for 15 minutes, because 15-minute candles. So I personally go back and forth. I sit on 15-minute, I go back to the 5-minute. If the 5 minutes looking tasty, I'll go to the 1 minute, because that'll tell me what the 5 minutes is about to do, right? But I don't sit on that 1 minute very long. I sit on the 5 and the 15 the most. And then every now and then I'll check the 4 hour just to see how it's going. See what the day is looking like. However many 4-hour segments have occurred during the day, I'll go back and add those up, and I'll figure out what the day looks like, right? Simple math. Nothing special. What is Silvertoik? Silver sitting at 118.39. It looks like it's liking that 118 figure. I had my stop loss at 118.75. It saved me to where I still had $100 in there that I got. Looks like I should have just waited. But what does that silver chart look like it's doing? I'll tell you what, my silver call is kicking ass. My $1,500 silver call is now worth $2,035. Up 500, it's up 25%. Should I sell? Comment below what you think I should do. We are going to trading view up, and we're going to trading view up with silver. See what I should do. Still got a long entry on the 15-minute. On 5 minute, we got a short signal. I'm not gonna buy that. It's been running hot, so maybe I'll buy a little short. Well, it won't let me buy anything because of my damn Bitcoin chart being down $196. What kind of shit is that? And the stop loss in at 85. Come on, baby. What are you doing? What are you doing to me, baby? Let's switch over to Bitcoin. Let's switch over to Bitcoin. Woo. Yeah, we're gonna hit my stop loss. 86,230. As soon as that money rises up, I'll have something to throw at silver. But I thought I had something to throw at silver, guys. I just cashed out at my stop loss. So what? $200 down. I don't want to sell. I can't sell just one. Or can I? My open bracket? I don't know what my open bracket is. Whew. Looks like the reds are dominating a little bit. Oh, greens are coming back. Still nobody watching. We're supposed to have fun. Yeah, give him some from me. Tell him this is for Buck. Hit the seat. Okay, my Bitcoin perpetual still down $217. Needs to come up, baby. I want me a silver contract, don't you know? 117.52 looks like it's doing all right. How much for one? Come on, man. Tell me I only have $193 in here, you bastards. Well, I'll tell you what. We'll go back to the silver calls. Do it. You're gonna what? Could you grab another gallon of Milo's tea? if they have it. They might not. Right. SoFi does not make it easy for you to send money out of your account. Transfer. There we go. From broker. No. No, no, no. How am I supposed to transfer out? You bastards. Pretty sure I gotta go to banking. And then transfer. Transfer money. From, oh yeah, let's go from savings. Chump change. We're just consolidating little bits of money. Right, now we're going to transfer that. We're going to transfer jump change to checking. Now, why can't I transfer from invest? Make me go to help find the transfer out. This is ridiculous. I'm just going to have to go to Google. Transfer from trade. Okay. That's what you got to do. Select trade. All right. Well, that's what we gonna do. Where's the trade button? Go. Let's go to the invest account first. No, get out of banking. Let's go to invest. There's the trade button. All the way at the bottom, it seems. I see no trade button. I see add cash. I don't see a friggin' trade button. Explore and trade. Cash. Withdraw. Going to go all of that. Checking. Review. All right. So now, really want to sell out of that silver call, but I really don't, because it's going to the moon, baby. Plus, I'll have to wait a few days to do that anyway. All right. So what do we have in the SoFi? That's who I bank with. There is, it can be a link for SoFi. It's such a great bank account. You can do everything in it. 369. That's what I'm going to transfer out. Good. Silver's coming down. That's good. Come on, you slow piece of garbage. Make me mad and start smoking. I don't want to withdraw. I want to deposit. What? You won't let me put a decimal in? 53. All right, fine. Just $53 now. It's now available. All right, good. Good. Get the blue check mark off my screen. Convert it to USDC so that I can trade. What do we want to buy, baby? What's dying? What is it doing? Is it dying? 115.30? Ooh, 111. Ooh, let's get a short. Might be a little late. Shit, can't even buy a short. I think my stop loss occurred on my Bitcoin. Did it? Nope. Still got some cash. Right, my liquidation price $79,787. Let's see what that ends up taking away. That'd be $800. So right now, I'd still have $500 if I cashed out of it now, but we might be on the run up here shortly. I just don't want to miss the boat on the silver, that's all. Silver coming down hard. Bouncing around between 111 and 113. I sold out at 119.50. That yielded me some cash. 59.75. $75 for that. That was another $75. Should have been another $75. So that should have yielded me a couple $100, but Coinbase, I'm not sure the way Coinbase works. A little bit aggravated that I don't have the money to buy one contract, which is nonsense because I do have enough money to buy friggin' contracts. That's my cash. That was quick. Pending deposit. Pending transfer. I don't know why it's pending.
That I know.
Let's see if I can increase my borrowing power. USDC. 167. Let's see if I can buy Bitcoin with that. And let's see if I can buy more with something else. Doesn't look like it. Now, what's my buying power, crypto? What's my borrowing power? 0. Available. Let's borrow that $39. $51.12. I just borrowed $50. crypto borrow. I have a loan processing. I have some feet that are cold and about to fall off. I might sell out of my. You took out a loan. All right. What is silver doing now? Can I buy a contract? It's sitting at 12. Where will it stop? Let's get in here where I can put everything down. Oh, yeah. And I can rub my good luck kitty. Yes, kitty. Yes, my little good lookie. What do you think, kitty? What should we be investing, huh? What should we be investing in, my good little kitty? What should we be investing in? Ooh, kitty, what does kitty think? Ooh, kitty says buy some silver. Here, buy some silver, kitty. Okay, all right. Take a look at these futures. Looks like we are hitting some resistance down there. That's good. I think it's time to buy long. Can I? I cannot. If I sell out of my my Bitcoin perpetual, which is down $275 friggin' dollars, I might be able to. It'll give me an extra 500 bucks. Let's close that out because silver's the money maker here. Wow, we're at 111. I can afford one contract. Let's buy it. Let's lose all our money. Let's do it. One silver long, done, in. I love how it starts off too. It always starts off at a negative. The liquidation price is 104. As long as it doesn't go below 104, we're good. I don't think it will. We've got some momentum on the RSI. The RSI is a very important number to follow, but I do believe that's negative momentum, something we don't like. Should have bought a short, apparently. Now let's go ahead and get out of that and buy a short, huh? Took a $40 loss. Let's go ahead and buy a short. It's good as crashing. Let's do it. Make that $40 back. It is just falling and falling and falling and falling. The low being at 109. I bought in at 110. And it's at 110.87. I bought at 110.20. So I'm already out 20 bucks, but it's okay. Keep on coming down, baby. That was a good call, kitty. Oh yeah, there we go. Now I'm up 20 bucks. Yeah, on the way to making that 40 back. See, I need to make another 500 bucks. Or actually, I need to make another 150 bucks, and then I'll be able to buy another contract. Because one contract sucks. Look at that. Plummet. Plummet, baby. Plummet. Let's go. Where's that resistance? A 106. Come on, baby. Push. 132. I'm up. Yeah. Come on. Come on. Market is closed. What? It's 10:30. What the hell is the market is closed for? Shut up. Market is closed. Well, that means silver ain't moving. I cannot close my position. Why is the market closed? Why is the silver market closed? The hell is going on at 10:30? That means it's moving way too fast for them to keep up, which means when it comes back, I better be up $10 billion. We need to find the remote, namely, so I can put on a silver chart and see what he been doing. This is unheard of. Silver market closing at 10:30 a.m. What are they talking about? What is this nonsense? Market is closed. Why? Market is open for trading from Sunday 6 p.m. to Friday 8 p.m. Oh, is it moving now? Looks like it's moving. Looks like it's trying to move up. We're going to close that short and give him my $100. Now, is it going to move up again? Let's go ahead and sacrifice that $100 on a contract for a long. Because it crashed hard. Somebody hit a reset. Looks like we are on an up. I'm already up 20 bucks. Keep on going, baby. Keep on going. That was a nice $100. Let's do it again. Let's do it again. Let's do it again, baby. Oh, yeah. Let's do it again. Let's see me freak out again. Just having trouble holding on to that. The candle's holding. It's forming a little wick. Resistance at 109. The banks are shorting and dumping. What a hell of a dump on the 5 minute. Let's see how the 15-minute looks. I bet it looks like hell. Short signal. Let's see for shits and giggles what the 1 minute's doing. The 1 minute can often tell you what the 5 minutes doing. And we've got a little bit of resistance at the 107. Which needs to come up. We got two little tiny down candles next to that nice pretty green candle that's going to keep on coming down. My liquidation is 102. So I think we're still good because we're still hanging out at above 108. So we need to get above 110 or 110. We need to get above 110 in order to make me money back and not be on another short tear. Here we go. We're going up. I think I'm going to get out of this as soon as possible because this chart. I need to switch from the 1 minute. See what happens. You look at the 1 minute and you start thinking all crazy. Let me go back to at least a 5 minute. Yeah, see, we're still in that same green candle. I'm only down 75 cents. I'm up $1. Come on, baby, push. We've got a hell of an RSI momentum. We've got some heat on that RSI, but it's the bad heat. That's what pushed that thing down. But that heat is over. RSI is kicking back up. We need it to kick back up harder. It's slowly dissolving that wick. Or it's making up his mind what it wants to do. I would love to have a long right here and then it shoot right back up to 119. That'd be very tasty indeed. I only got one contract because I've lost so much money already. All I can afford is one contract. I'm hoping this one contract will save my nuts. Because my nuts, he bun swole up. So speaking of swole nuts, it's time for some breakfast of champions. Yeah, what are you ding about? Seven hydroxy. Breakfast of champions right here. This makes me trade better. Not really. Let's take a look at what Bitcoin is doing. Oh, Bitcoin's crashing too. I'm actually glad I got out of that long I had with them. It's looking like I should buy another long because it looks like they've hit bottom. There's a good line of support right there. But it's not good enough. And their RSI is still below 20. That's not good. Crude oil is crashing as well. Silver's sucking it. Gold is sucking it. Well, silver futures, that's what I'm looking at. Silver futures looks like it might be on a recovery. Let's see what my call options on silver are doing. I imagine they're down a couple $100 because they are so correlated. Oh yeah. My silver option's down $45. It was up 500 earlier. That's okay. As soon as silver runs back up a few bucks, it'll be right there with it. I'm waiting on it to get to 125. Because Fibonacci says 125, then 148 or 138, I can't remember. Then a massive correction down to $60 or $70, so be prepared for that. and then it's smooth sailing all the way to 100, or excuse me, to 200. That's where those people get that figure. It sounds ridiculous, I know, $2. But if you apply the Fibonacci's all the way from the beginning, back when the Hunt brothers cornered the market, let's put some Bloomberg on. Oh no, President Trump is all over the news. He's getting ready to talk. Hopefully he says something good. The Asia Index update looks like everything's up. Wow. Ikea is up 0.03%. Kospi is up 0.98%. Hang Seng is up 0.5%. ICE is set to dial back the Minnesota presence. After their main pullback. I mean, we don't need people dying in the streets. We just need illegal immigrants gone. They don't need to be out there shooting Americans for whatever reason. I mean, yes, they're protesting and getting in the way, causing problems. But that's not how you de-escalate. That is how you escalate. Because even though those morons protesting in the street are wrong, there's a better way of going about doing what they're trying to accomplish.
Right now off 0.5%. The two-year yield, 3.54%. That's down 2 basis points. The yield on the 10-year, 4.23%. That's up 9 basis points. Over to commodities, have to point out gold is down nearly 2%, but at $5,237 an ounce. We have copper up nearly 3%. We have silver down about 6%. Over to Brent crude, it's at $70 a barrel. The currency, the Bloomberg Dollar Spot Index, that's strengthening by about 0.1%. And Bitcoin right now, it's down 5% at just above 84,000. Over to company news. NVIDIA CEO Jensen Huang, well, he is setting new records straight. He's saying that the company has yet to receive H200 chip orders from China. Beijing is considering whether to allow those imports. And sticking with NVIDIA, the information reporting that NVIDIA, Microsoft, Amazon, they may invest up to $60 billion in OpenAI's new funding round. In other news, International Paper will plans to separate into two publicly traded companies, one focused on North America and the other on Europe, Middle East, and also Africa operations. And shares are down about 4%. And finally, Lululemon, they are blaming customers for its see-through leggings fiasco. The company says users, well, they're just wearing the new leggings incorrectly. They say if you sized up and wore seamless skin-toned underwear, it would solve the problem.
As in, if you're not fat, you shouldn't be wearing our products.
I'm Lisa Mateo. That is your Bloomberg Business Flash. Start it, Paul. All right, thank you so much, Lisa Mateo, with our Bloomberg Business Flash. All right, tech stocks are really in focus. The Nasdaq Composite Index, Paul, is down 2.25%. The Max 7 names began reporting yesterday, and it's really a split view here when it comes to those big tech names. And another one is on the docket tonight. You've got Apple reporting this evening. At 4:30 p.m. Wall Street time, and of course we know that
that's going to affect my Apple call
for the company. Anurag Gada is our technology analyst, and he covers all things big tech. Anurag, Apple, there was a lot of good talk, a lot of good feedback on the latest Apple iPhone. I think it's the 17. Are we talking about the 17? Yeah, I think it's the 17. I've lost track of the numbers here. But that is, once again, the driver for Apple, even as a lot of the questions remain on its AI strategy.
Yeah, I think, tonight we have already have a glimpse that these guys
I hate Apple.
pay in terms of...
I hate them, but I'll make some of their money.
For the iPhone, I think it's going to be in double digits. And there is a bit of strength, as you said, on the iPhone 17 family of products. But there's also a trickle-down impact from what they could not fulfill in the prior quarter, and that's going to feed in. So that's going to be all good. I think, the big question right now is whether the rising memory prices are going to have an impact on their margins, and when does that show up in their numbers, and whether they're going to offset that with any price increases. So that's, I think, probably the most important thing as we look at Apple today.
Explain to us just again where we are right now from an Apple perspective as it relates to AI. What is their strategy? How are they executing on it?
In our view, I think this is probably the best strategy. Let the world go out and fight who has the best model, then they're going to go out and rent that model. Because imagine this, at this point, Microsoft, and then we've talked about this, I think, for about 6 months now, is going to spend somewhere north of 40% of their sales into CapEx. For Apple, that number is 3%. So if they don't have to go out and spend, hundreds of billions of dollars to figure out where to get the next model, whoever is the one, they're going to go out and use it and put it in their operating system and make it smarter. And the question is, well, why can't you do it in-house? And our answer is, why do they have to do it in-house? They didn't do that for search. Whoever has the best search product, they just use it and they will pay the money, or somebody will pay them to do it. So from our side, we like it financially. I think it is the right thing to do. I think this year, that would be one of the bigger differentiators for Apple compared to all the rest of the large tech companies.
Do we know how much Apple is paying to be able to embed Gemini into its software?
Yeah, I think Mark Gurman mentioned about $1 billion a year, something like that. Now, again, they have not disclosed that number, but that's not just the only thing. That's just probably the licensing fee. Then they're going to probably use Google's data centers to host those, transactions, all those queries at that point. So it will have an impact on their operating expenses. But frankly speaking, for a company that generates, let's say, $400 billion in revenue, that's nothing. I mean, compared to if you have to go out and spend $100 billion and you don't even know whether that model would be good enough down the road or not.
They have plenty of cash to do it.
Yeah, exactly. On Microsoft here. I mean, it's north of a $3 trillion market cap company. Looks like 38% cloud revenue growth. Stock is down 12%. What's going on?
Yeah, I think that's really what you're seeing is, last quarter the growth rate of Azure 38, 39, this quarter was 38, they're guided to 37 to 38, and that's not good.
Silver currently at 108.71, bouncing around between 107.48 and 108.65 currently. 107.48 being the absolute low of the day, well, of the last 30 minutes. It crashed right on down to 107.48. Seems to be a point of contention. And it seems that 108 is a difficult spot for silver. But you know what? We will get there, won't we?
But the cloud revenue is growing on the 30th. I think it's a bit silly, to be very honest with you. They know what they're doing in terms of R&D for future growth. But frankly, from our side, 38% growth is not a bad number.
No, it's hard to hold your nose at that. But is this a company?
Talk to me when the market is open.
Worried about this kind of market?
Gotta have me coffee.
Like you said, they're confident in their strategy overall. They're going to move forward with this, regardless of whatever message investors might be trying to send.
No, I don't think they will change their strategy. I mean, they are doing whatever is right for the Microsoft product of families.
The right for the Microsoft.
Think about it this way. In 7 years, by 2032, they will lose the IP that they get from OpenAI. They need their own models by then. They have to have it. So if they're going to put some R&D dollars to take care of that, so be it. I mean, I don't think that's a problem. They are actually, even now, one of the bigger beneficiaries of all the Gen AI spending that's out there. It will all
They're
come back
the
to the cloud.
beneficiary.
Whether it takes a year, 2 years, I don't think that's a problem from a long-term point of view.
What about CapEx? When we saw Meta put a huge CapEx number up there, way above where the street was forecasting. Here from Microsoft, their CapEx up dramatically as well, up 66% from the year earlier. How do you think about CapEx, or how's the market thinking about CapEx?
So it depends on who's spending the CapEx. So when we think about it, the 3 most important companies in our view is Amazon, Google, and Microsoft, because they have really strong cloud business that can monetize. How that Meta monetizes it, I don't know. And frankly, the reason for that is because they're saying they're going to drive more engagement internally with their products, but they don't have a cloud business that can monetize it. Their model is not being, bought by Apple to put it in the operating system. So I have no idea what the future for that capex is, but I feel very confident with the capex that's driven by the three large hyperscale cloud providers because we know the business that they're in and where monetization is going.
Let's get that pretty kitty right there.
What happened with IBM? Good enough for an almost 5% gain. What were investors responding to?
Yeah, I think it's again low expectations. That's where the revenue growth rate, was better. They came at the total revenue growth was 9%, but the software division was around 11%. So I think that's really the benefit. But think about it, ServiceNow down so big, their growth rate was in the 20s. Microsoft, same thing. So it's all a matter of relative expectations, today.
All right, very good. Anurag Rana, a lot going on out there in the world of tech, including Apple after the close today. Some big numbers being bandied about for CapEx. Anurag Rana, technology analyst for Bloomberg Intelligence, is joining us from Chicago. Folks, a programming note: California Governor Gavin Newsom joins Bloomberg Business Weekend with Brad Stone for a fireside chat.
Let's switch this the other way so I can see what's going on here. He's like, the hell with that camera. Give me that food. Alright, we only got 2 cans of this wonderful, glorious food. And she'll eat this entire can. That's good breakfast for Kitty. Oh, this is his favorite breakfast. There we go, Kitty. You eat it up. Okay, you eat it up. You eat it up, Kitty. Anytime I give her this food, she does me a solid and poops in the box. She doesn't like to poop in the box, but she knows I want her to poop in the box because I have scolded her for not. So I know this is a market open, but we're going to watch the kitty eat while I talk about the market opening. And guess what? It is. It is. Market is open. It is almost 11 o'clock. This stream is about to switch to a kitty stream anyway. I think we'll operate until about noon. And then we will switch to a kitty sleeping stream because once she eats all that food, she will be tired. And it's a lot from watching all these numbers. Takes a lot out of me, A word of advice to any trader. Your day should be over by noon. By 12 o'clock, you stop looking at these numbers. You will leave them alone. Because this is when all the major trading happens between 9:30 and 10:30. That's when all the major trading happens. And then from 10:30 until about noon, that's when everything settles down and cools off and you can see about where things are going to go. But if you sit here and watch it all day, you'll likely make a mistake. Now, I will say around 2 o'clock, around noon and 2 o'clock is when the London market crosses over with ours, which is always a volatile time right around lunch and right after lunch, which is a good time to make some final moves that you were considering earlier in the day. You'll have a little more information to go by around 2 o'clock. That's for the people who are a little in it more than the average person who's playing with big dollars and knows what they want. They're usually done by noon. So try to get yourself in that kind of situation where you're done by 12 o'clock every day.
This is Bloomberg Intelligence with Scarlet Food
And I will
and
leave
Pulse
Bloomberg
Beauty
Intelligence on
Bloomberg Radio.
while you watch Kitty.
Sweeney live here on our Bloomberg Interactive Brokers.
I'm gonna go out and have a smoke.
Are you looking for an AI stock? How about this one that you didn't think about this one? Caterpillar got an earnings boost from selling power generation equipment to AI data centers in the fourth quarter. Stock trading up today, taking a 2-week high. How about that? Chris Giolino covers Caterpillar and all those other construction companies, manufacturing companies, senior U.S. machinery analyst for Bloomberg Intelligence. So, Chris, I bet you didn't think early in your career that Caterpillar would be a tech play. Talk to us about their quarter.
Yeah, no, certainly not. And, you know, it was one of the, I think, the top performers last year in the market, and certainly off to a good start this year. Quarter was solid, you know, beats both on the top and bottom line, really driven by higher than expected volume in their power and energy business, as you alluded to. But I think the real standout and the takeaway this quarter was really the unprecedented order and backlog growth that we saw. Now, we came into the quarter with backlog already sitting at a record level, but we saw orders increase more than 70%, which drove nearly a 30% increase sequentially in the backlog. And what's encouraging, it seems that it's pretty broad-based. It's not just the data centers and AI. It's construction starting to contribute, mining starting to contribute. So you're really starting to see a lot of momentum starting to build moving into 26 as we get these, not only the cyclical recovery start to materialize, but also the secular tailwinds kind of converging here.
So it sounds like a number of different drivers, and do they all move to their own timeline in terms of that cycle? You know, they're all kind of hitting their stride at the same time?
Yeah, I think as we go into 26, you are starting to see those cycles converge. The more cyclical mining and construction businesses have kind of been bouncing along trough for a couple of years now. We're finally starting to see some stronger order activity and momentum building on the non-res and even on the residential side in North America. Mining, you're starting to hear some more projects on copper and gold. And then obviously they can't add capacity fast enough when it comes to power generation. They're going to be more than doubling their large engine capacity through the end of the decade. So that's more of a supply constraint as we look here, at least in the near term.
Chris, so when you talk to institutional investors about your group, do people just buy the group, i.e. machinery, construction, and when the cycles are coming together and then sell them when they're not? Is that, or do I have to be real bottoms up with individual companies?
You know, it varies, and I think it is becoming a little bit more bottom up. You know, historically, for example, trucks, right? You'd always buy when truck orders were at their worst and bottoming. As a short cycle business, and you kind of pile into those names at that point in time. Ag is a little bit idiosyncratic in terms of how those cycles work, and a little bit detached from your traditional economic cycles, in that it's more driven by crop prices and farmer incomes. And then construction equipment, certainly a more cyclical GDP type play. But what you're seeing now is you're starting to see some divergence between, you know, those names that have the data center AI exposure, like the Caterpillars and the Cummins of the world. And those have really outperformed over the last 12 months because of their exposure, where a lot of the other machinery names just aren't as levered to the data center play.
How exposed is Caterpillar to tariffs? I mean, there are some tariffs in place, and there's on a daily basis threats of new tariffs being put in place.
Yeah, if you want to pick apart one negative in the quarter, it was the tariffs. They did come in a little bit higher than we expected, and it continues to weigh on margins, particularly in the construction and mining businesses. Tariffs in aggregate were roughly $1.7 billion headwind in 2025. That's going to step up in 2026 to about $2.6 billion. We've really seen Caterpillar kind of hesitant to push price to start to offset these. I think that's really been a concerted effort to try to gain market share, particularly as we are in a softer part in the cycle. I think pricing is going to become much more of a contributor as we look into 26. Right now, they're guiding to about a 2% contribution on the pricing side, but I won't be surprised to see that go a little bit higher, particularly as some of their end markets start to recover.
Those front loaders, dump trucks, all that kind of stuff. Where do they actually manufacture this stuff?
All over the world, right? They are the largest equipment producer globally. They have a pretty extensive manufacturing footprint here in North America, but it is a very global business. and they certainly have a market leadership position in most of the products that they sell.
I know we like to look at Caterpillar as kind of this barometer for global GDP because it's so exposed to all over the world. Did the company say anything in regards to what it is anticipating for growth for this year, like hotspots and maybe slower parts of the world?
Yeah, so they put out back in November after their analyst day a 5 to 7% revenue CAGR target through the end of the decade. They're kind of guiding us to 26 being kind of towards the top end of that range. So think 7% plus type growth. We actually think that might end up being a little conservative, just given the strength that we're seeing in the order book, just given that the backlog continues to sit at a record level. So we have really extended production visibility here for 2026. So I actually think that outlook could be a little bit conservative, particularly as we continue to see a lot of their end markets come off the trough.
Tell them to do a 10-for-1 stock split. Stock's $650 a share. It always gets me. That'd be tough for some investors to buy it. Chris Giolito, he's a senior U.S. machinery analyst with Bloomberg Intelligence, covering Caterpillar, putting up some good numbers today. Again, stock hitting a 52-week high today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio at Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments with a broad sell-off in the marketplace here. The S&P off 1.3%, the NASDAQ off 2.4%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Intelligence team. Paul Sweeney, Scarlett Fu, and Lisa Mateo in the Bloomberg Interactive Broker Studio and streaming live on YouTube. Coming up in this second hour of Bloomberg Intelligence, AI spending worries a big theme this earnings season for a handful of big tech names and not so much for others. So we'll dig into all of the earnings that have come out. Paul Goldberg, he is our senior equity analyst, will join us to recap Blackstone earnings and also talk about how Blackstone is in talks to become the Hong Kong property developer, New World's top shareholder. Mandeep Singh, he is our global tech research head, will talk to us about Meta. AI spending, not so much a concern for Meta, given how its share price is rallying today. Winnie Cesar is the global head of strategy at Credit Insights to give us her outlook on the markets. A lot of tech companies following a lot of big banks in selling debt right now. And Jody Laurie, she is our credit analyst, will talk to us about Royal Caribbean jumping on accelerating demand, and that is spurring some fleet growth. Geeta Ranganathan will give us the latest on what's going on in big media as well. But first, let's go to Lisa Mateo for our Bloomberg Business Flash.
You got it. We've got stocks really slipping. Investors sizing up those AI winners and losers. You talked about it. That surge in big tech spending. Looks like on the losing side, we do have Microsoft. Their shares down nearly 12%, dropping the most since 2020. It's higher spending. Well, that conflicted with that slowing cloud sales growth. Tesla, they'll spend $20 billion this year on AI and self-driving vehicles. They'll also put another $2 billion into Elon Musk's XAI startup. The company discontinuing its two oldest vehicles. You have the Model S sedan and the Model X SUV. Its shares, they're falling nearly 3%. On the upside, Meta, they're saying they're going to double capital spending as much as $135 billion this year. It also delivered stronger than expected sales outlook thanks to its advertising business. Its shares are up 7%. Also in tech, IBM shares, they're up about 6%. Strong growth for its software unit. After the close, all eyes turning to Apple, the iPhone maker set for its biggest sales quarter ever. Let's get right to it. So we have the Nasdaq falling 2.5%, the S&P 500 down nearly 1.5%, and the Dow right now off about 0.7%. In the yield space, the 2-year 3.55%, that's down 2 basis points. The yield on the 10-year 4.24%, and that is little changed. Commodities, have to point out COMEX gold is right now down nearly 2% at, though, $5,248 an ounce. We have silver dropping about 4%, copper up about 3%. Brent crude, $70 a barrel. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Hi, Lisa Mateo. Thank you so much. We appreciate it. Scarlett Food, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, of course, we've got big tech earnings, so that's really been in focus today. I've got my eyes on Microsoft. We're seeing this stock down as much as 12%, really plunging today. Of course, we know this is after reported slowing cloud sales growth. This, of course, is really underscoring a lot of investor concerns about the return on spending. Of course, we've been talking so much about the AI spending ballooning, and that's what people are really looking at here as it relates to Microsoft. So you are seeing those double-digit losses here, but we did see that Azure, the cloud computing unit, did post a 38% revenue gain during the quarter. That just met analyst expectations. So you are really seeing the stock being punished down for its worst day since March 2020, that pandemic.
All right, a fellow Mag 7 name moving in a different direction, Nora.
Absolutely. We're looking at shares of Meta Platforms. That's ticker META. We're seeing shares up as much as 11%. That's the best day since July. This is after the company topped projections for holiday quarter revenue and also gave a strong forecast for the current quarter when we look at that earnings report. So we did see that the company projected record spending for 2026. The CEO, of course, Mark Zuckerberg, saying it's aggressive campaign to amass AI infrastructure, computing power, and talent. That's really what a lot of Wall Street is hinging on, those words, really. So we're seeing, of course, Wall Street really celebrating the print that we got out of Meta Platforms, definitely diverging from what we saw from Microsoft.
All right, how about the defense contractor Lockheed Martin?
Yeah, Lockheed Martin, it's actually hitting its highest level ever. Shares are up as much as 8.1% on the day. This is after it reached a deal with the Pentagon to increase its THAAD missile production, planning a multi-billion-dollar investment over 3 years to expand production. So the company also did report a 9.1% increase in sales to $20.32 billion in the fourth quarter. So you're certainly seeing Wall Street rallying behind this name. We're seeing shares up about 4.9% right now as we speak. That's ticker LMT.
Good stuff. Thank you so much, Nora Melinda, our Bloomberg Television markets correspondent. And for more conversations like this, subscribe to our Stock Movers Reports.
Subscribe to my channel.
Some of the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify.
We are going to check out.
Listen. All right, big day in earnings.
What is Trump talking about today?
As he kicked off this week, not too far from the Hawkeye state of Iowa, really dealing with getting benefit and relief to farmers and protecting them from the Chinese Communist Party and outside influence, but also
Yahoo Finance.
Wing doors in the back, right? So why introduce it? Just want to focus on FSD and robots, okay? And so looking at FSD, Tesla revealed finally that they have 1.1 million paying FSD subscribers. They're going all in on growth there because they want as many vehicles as possible to have FSD because maybe they might actually join a Tesla robotaxi network. Now, Musk said last night that he said there's around 500 robotaxis circling around Austin and the SF Bay Area. You know, we can't actually independently verify that, but that's what he said. Removing that safety driver, that's sort of with the Austin and the SF Bay robotaxi network. Removing that safety driver is a big deal, and that we'll see that ramp up potentially this year, along with a number of new operating regions that they noted last night. The question is, how fast will that come in? Investors want that to happen really fast. And speaking of really fast, Optimus, right? So Optimus, how will that scale? You got rid of the Model X and Model S production lines to build the Optimus lines at the Fremont factory. Tesla looking to reveal the Optimus Gen 3 robot this spring. This is the one that's the production robot, and looking to scale production to before the end of 2026, which I think caught people off guard in a good way. And then they want an eventual capacity of 1 million robots a year.
Yeah, I really thought it was fun. George Gianarikas from RBC called this a burning the ships moment for Tesla. Burning the ships in terms of the X and the S, and moving ahead to Optimus. We're going to catch up with George in the 10 o'clock hour. We're going to talk to Rishi Jaluria more about what's going on with Microsoft. Dan Pross, thank you so much. Appreciate it. Well, U.S. stocks are continuing to power higher as tech giants spend big to build out their AI infrastructure. But over the last few months, investors have not been piling into tech like they used to. There's been a rotation out of the sector as investors eye everything from small caps to simple goals. Joining us now for more on all this is Peter Cheer, the Academy Securities Head of Macro Strategy. Good to see you, Peter.
Good to see you, too.
So we have this latest move in stocks coming as a result of tech, powering things to new highs. So how does that fit into the overall picture now?
So, I think what we're really seeing is this, what we've been calling PROSEC, or this move to produce for security. So what do we need to produce for production for security and resiliency? So I think energy, electricity, that's a huge part of it. It fits nicely with the data center and AI, all these conversations about the investment, et cetera. Okay, who is going to power those? Where are we going to get that electricity? And at the same time, if you have these massive demands from the data centers and AI for electricity, you've got the average person sitting there wondering what's going on with their electricity bill, right? All of a sudden, literally everyone I talk to is like, why is my electricity bill X more than last year? And you look at it, CPI, the component of electricity, it moved about 4% over 10 years, and it's moved 40% in the last 5 years. So all of a sudden, that's the key. So I think we're going to see massive amounts of electricity generation. I think it's going to be solar. I think it's going to be coal, gas, nuclear, all of those. I do not think wind's going to make it under the Trump agenda. He just hates wind too much, but I do think he is actually going to cave in on solar. So you want to own those. You want to own construction facilities, anything that's going to help this build out. And then the other flip side of it is chips. I think Intel is going to be a big play for this country. We, as a nation, own 10% of it. I think the president's going to do what he can to help Intel. They've got their own technology, and you're going to see the need. It's just so clear. We need to make chips domestically. We cannot rely on Taiwan to produce our chips when they have to ship them right by China. So those are kind of the barbell investment strategies to me. These rare earths, critical minerals, electricity, and then the chip industry.
And do you want to own that stuff instead of the hyperscalers and, some of the companies that are going to be, building the LLMs or putting them into companies?
For me, yes. And so one, Intel's been doing phenomenally well, right? I think it was up 80% last year, it was up 40% this year, so it was off, but after earnings. But they're going to make chips for this country, right? People are going to be forced or need to use their chips. And the electricity, you sit there and you look at these hyperscalers. One, they all trade at fairly high valuations. You see one down 8%, the other up 10%, so there's volatility. And to me, it's very unclear, right? It was all ChatGPT 2 years ago. ChatGPT, when I talk to people, it's kind of, I don't know if it's anyone's top-ranked LLM right now. So who knows how this is all going to play out. So at this point, given valuations, I'd rather bet a little bit on the infrastructure than who's going to win.
And historically, Peter, you're a macro guy. So to take a step back for a moment, we're coming off of a Fed meeting where they didn't change rates, where really politics seems to take more center stage than what's going on in the economy. So what does that backdrop look like? I mean, we don't seem to be out of the woods, at least according to the Fed, yet in terms of either inflation or the job market.
So one, I think the Fed is still a little bit hypersensitive to the fact that they missed and were all on team transitory. And again, if you were a corporation, someone would have got fired, lost their job. They're all still there. So I think that kind of weighs on them. When I look at it, I think the job situation is still a little bit murky. I don't like the job situation. I like looking at the JOLTS quit rate. To me, that's kind of a crowdsourced data. People quit if they think they can get another job. So I see weakness there. I think the Fed is overly concerned about inflation. When I look at something like a Trueflation, which seems to try and measure inflation a bit more real time, it's way lower. It's saying it's 1.5%. Now, it doesn't capture everything. The flip side of that is real estate. We still use, I think, it's owner's equivalent rent. And I can tell you, I think every year or two I go through the BLS and try and figure out how to calculate owner's equivalent rent. I scratch my head. And yeah, maybe 50 years ago, people actually rented single-family homes. That's not how it works now. People rent apartments. You have Zillow rent. You have Cleveland has Fed has a real-time rent. It's all come down. So we're still sitting there reacting to this overstating cost and shelter in CPI. I think the inflation story is fine. I think we can be sub 2.25%. That should let us cut. I think there's a decent chance Powell cuts once more before he's done. So he's got 2 meetings to do it.
I think you're an outlier on that there, Peter.
I am an outlier. I guess my view is the data's kind of pushing that way. He actually did kind of point out that he might cut even if GDP growth was strong if he's worried about jobs. I'm worried about jobs.
Right. He seemed to indicate, yes, that I thought that was a really interesting answer to a question about GDP versus jobs, sort of showing different things. And he seemed to indicate it's the jobs data that tends to be more of a real signal, typically.
Yeah. And so I thought that was really important. Yeah. The other thing is, I feel like, okay, so this month he stood up to the president and said, we're not going to cut, and we coalesced around no cuts. But I feel like, okay, you've won. He's got the moral high ground now. If the data shows, I think he's not going to be afraid to cut at one of the next two meetings. And no matter what happens, I think whoever comes in, whether it's Rick Reeder or someone else, we are going to be down 75 bits by September. We want this economy, the administration wants the economy running hot by that time. And I think there's also going to be a big fixation on 10-year yields. I think they're going to use the balance sheet in creative ways to keep longer dated yields lower. You just look at one of their stated goals. Besson talks about it all the time, and I listen to Besson probably more than anyone. They want mortgage rates lower. Well, you can do that by buying mortgages. That helps mortgage spreads, which is part of the equation. But mortgages price off the 10-year treasury. So if you get 10-year treasuries lower, that helps. So look for creative ways to get yields down. They can do things like Operation Twist, where they sell some of their shorter dated T-bills they own to buy longer dated bonds to help that. They can work in conjunction with the treasury. And that's the other thing. I think, everything's been so fixated on, the Fed independence. I think we're missing that you can have a lot of cooperation between the admin, the treasury, and the Fed, and it's still independent, but cooperation is a good thing. We've seen it in times of stress. We saw it during COVID.
Right, but but the two times you mentioned are times of emergency.
Yes, but
And for all three of them to coordinate, they have to be on the same page about that level of stimulus being necessary.
and I think you will see that as the new Fed chair takes over. Again, some of these things, it's so wonky. We all treat like this neutral rate as though it's some exact science. And I think even Yellen was once quoted saying it could be anywhere from 1% to 5%.
Right.
So there's a wide range. I think Moran's done a good job kind of attacking, saying the neutral rate's lower than we believe. So to me, 75 bips, again, I don't think we're going to get anything like President Trump wants. We're not going to be 1% Fed funds, but we can get to 2.875%, which would be 75 bips from here. I think pretty easily and justifiable.
What do you think about this idea that tariff inflation is still making its way through?
Yeah, I think it's slowly bleeding its way through. And again, I think that's kind of a steady state because one, some of the exporters did cut their prices to give people a break. Well, they're going to slowly raise those prices. The tariffs keep coming. So I think you're seeing that. And when I look at everything I'm talking about, building up the electricity, building up the data centers, there's going to be construction costs going through this. There's going to be pressure. I'm getting a little bit concerned about commodity prices. I mean, they are skyrocketing. It went from gold and silver to now, if you dig it out of the ground, it's all of a sudden become very expensive. So that's my one fear that I didn't quite see until 2 weeks ago. I'm long a lot of these. I love uranium. I think uranium's going to do very well. I just don't see how we get to a 20, 30-year, 40-year energy plan without doing some sort of nuclear. So that's been kind of my big take in there. And again, I like companies like AES, some of the more solar-based companies that have been left behind, because I do think the President Trump. And so when I look at uranium, that's a very high beta play and very risky. When I look at something like an AES or some of the utilities, far low, much less beta, a little bit of a dividend, so you can play both of those.
All right, Peter, thanks so much.
Thanks very much for having me.
Coming up on Morning Brief, Southwest Airlines reporting a strong forecast for 2026. We'll talk to CFO Tom Doxey next. Southwest Airlines issuing a strong full-year outlook, getting a boost from new initiatives, including assigned seating and fees for checked bags. Joining me now, Tom Doxey, Southwest Airlines CFO. Tom, it's good to see you.
Good to see you again, Julie.
So I saw one analyst praising this outlook, not just that it beat estimates, but also that it was sort of a clear outlook for the year. And I'm curious what gave Southwest the confidence to issue this outlook, sort of what went into it.
Well, we've simplified things, I think, for the investor community, where we've gone with a simple earnings per share metric. We've done that for the quarter, and we've done that for the year. 2025 was really a foundational year for us. We put so many things into place, things like bag fees, changes to our loyalty program, all the preparations that we needed for extra legroom seating and assigned seating, which it was executed really well by our teams earlier this week. All of that laid a great foundation for us now as we move into 2026. What we're guiding is earnings that are 300% greater than what we had in 2025. And so it's really now the financial impact of all of those things that we put into place that are now resulting in this really strong guide for us for 2026.
So Tom, this is you guys pulling on all of those levers. I am curious about underlying demand. It sounds like you're counting on making more per passenger, but what do you expect traffic to be like for the balance of the year?
Demand's been strong for us so far this year. I think there's a lot of demand for our product. When you look at the things that we've done, every single day we have more and more of our aircraft that have our brand new interiors, things like the new lighting, in-seat power. Of course, we announced free Wi-Fi for all of our Rapid Rewards members just a couple of months ago, and that's in place now. So all of these things, all of these product elements that we've rolled out really have helped to have really strong demand for us as we've started the year.
And Tom, there have been some questions about sort of overall consumer spending, consumer confidence, how that's affecting how much people are flying and which airlines they're flying for that matter. Any color you can give us on that and what you're seeing?
The consumer's been strong for us as we've started the year. We at the end of last year, so we had a guide that we had put out for a full year EBIT of $500 million, and we saw a lot of strength as we were ending the year on the revenue side. We finished well on the cost side too, continue to spend smartly as a company. We ended up with $574 million in EBIT for the year, and so as we approached the end of the year, we really saw a lot of strength, and that's continued as we've come into this year.
Tom, among the big changes you guys have made to Southwest, you rolled out the starting to charge for baggage late last year, but this is the very first week, as you and I speak, that you guys have transitioned from open seating to assigned seats. And this is a big cultural change for Southwest. Have you been in any airports? Have you seen how it's going? What are you hearing?
It's going really well so far. Our teams are just incredible. One of the things I love about Southwest is our culture. And our teams in all of the different airports, we have an internal Facebook site. We're all making different videos, everything from bye with passengers in the background waving, as our folks were dancing in the front. Everything from that to just really funny little sketches that people did. We were ready for it. We had all of the technology in place. We had all of the training in place. I did a post earlier in the week where I was highlighting part of my team, which was our facilities team, which changed out over 700 gates in one night. So we were ready for it. It rolled out really, really well. And this is something that's resonating with our passengers. So for those that were choosing not to fly Southwest, 80% of them gave as the primary reason the lack of assigned seating and the boarding process. So that's something that we're changing, and it has resonated really, really well for us.
And speaking of which, Tom, another feather in your cap is that the Wall Street Journal awarded you guys Best Airline for 2025. And one of the things I have to admit that surprised me, I mean, they rank a bunch of things, delays, cancellations, et cetera, but they also look at consumer complaints. And you guys did not have a high complaint rate, even as you were making some of these changes last year that we're talking about. You would think people, especially longtime Southwest customers, would have been troubled by those changes. Why do you think they weren't?
It was a huge deal for us. We were number 2 last year, just barely number 2 And this year, for 2025, by a wide margin, we were number one in that Wall Street Journal rankings. And as you said, think of it like a portfolio of operational metrics. So where anybody can point at one and sort of craft a story around one particular metric, and maybe create a metric of their own. This is broad-based, saying that we were the number one carrier in the U.S. for all of those operational metrics. And you're right, we were number one for the least amount of customer complaints. Our people are incredible. Our policies are customer-friendly. And we've made so many investments in the product and what we're doing. Again, these new interiors with new lighting and big overhead bins, the in-seat power, free Wi-Fi. So we've invested so much, and there's more to come. We're not done yet. We've done so much to lean into the customer. We're not done.
Lastly, Tom, I got to ask you about this winter storm here. I know Dallas was certainly affected by ice and snow. We got walloped here in the Northeast. What can you tell us about the effect that had on operations?
Well, again, our people are just incredible. And of the larger carriers, we had the lowest number of cancellations during that period. It just speaks to the investments that we've made in the operation and our people and the technology that we have. That was likely about a $30 to $40 million impact to us. And as we said in our materials that we released, that is included in all of the guidance that we've given. Storms happen. That's part of being an airline, is being able to operate well during those storms. And I couldn't be prouder of our people for the way that they executed.
Tom, great to see you. Thanks a lot.
Thanks, Julie.
Take care. Coming up on Yahoo Finance, opening bid with our executive editor, Brian Sazin. He's with us now. Saz, what's coming up?
Julie, you flying Southwest? You're still taking that private TV anchor plane?
Yeah, right. See, listen, I fly out of Newark. Southwest sadly doesn't have I don't know if they have any flights out of Newark.
We gotta get Tom back. Let's go. Let's ask him the hard-hitting questions. Julie, I'm not gonna talk about planes, even though I really want to. Really enjoyed that interview. I'm all in on tech. I'm gonna got Meta, Tesla, humanoid robots, CapEx, outlooks for 2026. We're fired up, Julie. We got a lot going on here.
You're always fired up, Sal.
Always fired up.
That's one thing.
I just live in a state of fired up.
Can rely.
Just one big flame over my head.
That does it for Morning Brief. Watch the coming immolation on opening bid.
minutes a day after a Fed meeting where Jerome Powell threw up the bird to rate cut seeking President Trump, we are now in the land of the Powell pause friends earnings out of Microsoft. Meta, Microsoft, and Tesla are dominating the business news cycle this morning. Precious metals are ripping higher again. I'm really locked in on copper. To all this, I say good Thursday morning. I'm Yahoo Finance Executive Editor Brian Sozzi, and you better be locked in because earnings season is starting to raid. And if you aren't locked in, get there right now because I'm locked in. So here are some quick hot takes on those tech earnings I just mentioned. Each of these reports have their own nuances. No broad blanket analysis applies. Let's get it rocking here. First up, Tesla. I love the more emotional billionaire Elon Musk on the earnings call. Love that he thinks we are entering an age of amazing abundance. Appreciate that he got sad when talking about scrapping the Model S and Model X to build humanoid robots. Maybe the Cybertruck should be next. I hate trying to park my two-door sports car next to one of those big monsters. So why did investors like a quarter where total deliveries tanked 16%? Because people don't want electric cars. One, there were signs throughout the earnings call Tesla is entering a period where robotaxis and humanoids will be key financial contributors. Two, Musk said Tesla needs to build and operate what he is calling a terafab to manufacture semiconductors. This will cost billions of dollars, as Elon can attest to. But this is the type of bullish nugget Tesla fans eat up, as it shows Elon is all in on building a different, possibly more lucrative Tesla in the next decade. Next up here on this fun list, Microsoft. Another corporate jargon-filled earnings call from the Microsoft executive team. It has almost come to a point where an investor can't understand what Microsoft is even working on anymore. My brief hot take on the stock getting hit. Azure cloud sales missed estimates. Azure guidance wasn't super strong. CapEx spending was above street estimates. 45% of MSFT's backlog is now tied to OpenAI. Although I will note, at least Microsoft showed signs of monetizing AI. That is another fancy word of saying they're making money. Called out 4.7 million paid Copilot subscribers, up 75% year over year. Lastly is Meta. Just like longtime foe Elon Musk, Mark Zuckerberg laser focused on charting a possibly more lucrative future for the social media giant. The street is shrugging off Meta's CapEx this year, potentially doubling year over year. Instead, more attention is being placed on how Meta's AI investments are driving better revenue across Facebook, Instagram, Threads, and I left this out, but I will add WhatsApp. Here on the Open Bid Roundtable, Kenny Polcari, Slate Stone Wealth Chief Market Strategist, Alan Hazen, FL Putnam Investment Management Chief Market Strategist, and Yahoo Finance Senior Reporter. And as for good to see you all. Kenny, coming out to you here. Out of all these quarters that just reported, which one did you love and why?
Well, listen, I don't own Tesla and I don't own Meta. So I look right at Microsoft because it's one that I own. It's one that I like. I wasn't fazed at all by the negative reaction that we saw in Microsoft. You made a couple of very key points. I'm in it for the long run. I think the reaction is an overreaction. I think it provides an opportunity to buy a quality name at a discount. Now look, Meta shot straight higher after Zuckerberg got done, and that's great. And look, they got an $800 price target on. I think it's traded $7.25 right now. And Tesla, I think, makes a very interesting comment to your point about stopping production of the X model and the S model and moving more into humanoid robots. And I think that is going to, in fact, be the future. He's made it very clear that's where it's going. So I think there's an opportunity in Tesla for anyone who doesn't own it, like me, to take another look at it and to jump on. But I was while Microsoft was a negative reaction, I look at it as an opportunity to pick up a quality name at a discount.
Kenny, as if I needed a reminder why you're my favorite, I'm reminded today because you always shower me with praise, love, appreciate it. Ellen, I'm going to stay on Microsoft. Kenny's fired up on Microsoft. Did this quarter excite you? The street not liking what they had to say on CapEx, the cloud sales, maybe not so good. I mean, they did grow strongly year over year, but there were some negative points in this quarter from MSFT.
So as I look at Microsoft, I think the key thing that was problematic, not only the Azure revenue year-over-year growth missing by a little bit, not too bad, but the free cash flow just plummeted, right? It was down to $5 billion. It's usually in the $20 billion range. So what we're seeing is Microsoft is spending all this CapEx, okay, fine, but you need to be able to have cash flow from operations to fund that, and they didn't have that. And then you look at the CapEx that they're projecting for this year, and it's going to be problematic as well. So I think the question is, and why the market likes Meta so much more right now, is are you going to be able to see the return on that investment? And with Microsoft, they're talking about, yeah, we have 15 million Copilot paying subscribers, which is kind of a small number when you think about the scale of Microsoft's corporate business altogether. But are they going to be able to get the return on that? Meta put up the numbers. and we'll see what happens. The thing that concerns me is that they're talking about 115 to 135 billion in capex this year, Meta. Last year they had 115 billion in cash flow from operations. So they better start producing increased cash flow if the market is not going to penalize them next quarter when the capex shows up in their free cash flow numbers.
Ellen, as a former analyst, I love that you're coming up here on our roundtable talking about FCF, that's free cash flow. Inez, coming over to you. Look, these Microsoft earnings calls have gotten really boring. I barely even know what they're doing anymore, full disclosure. It's become such a complicated company. But I'm listening to this call, and then Satya drops this nugget that 45% of Microsoft backlog is tied to OpenAI. And if you're concerned about circular financing as it pertains to AI, that is a number you don't want to see.
Exactly. The circular financing is something that the street has really been concerned with, and you've seen it with some of the sort of stock performance from some of these companies, especially also when it comes to software companies. These have not performed so well. But, going back to these reports, look, I think that I agree that with Meta, they have been able to show several points. That agents are working, their shopping tools are getting better, and this is very significant for their bottom line. And also talking about even productivity within the company. I found it so interesting that they said that since the beginning of 2025, per engineer, they have seen an increase of 30% output. That their projects that used to take now a lot more people are taking less people. I think that these are some of the signs of why you're seeing sort of the divergence in the stock performances between, for example, a Microsoft and a Meta that was able to highlight some of these points.
All right, let's keep this cooking here. That was good Microsoft analysis. Kenny, I'm going to go out on a limb and say that you don't have a Model S or Model X. I think you're a gas-powered car guy like me, and that's cool, man. But why we should care about what Elon said about S and X, if you like Tesla, you got to care, because now he's going to take those factory lines and he's going to start pumping out humanoid robots. At some point, Elon's got to, we need to see these robots, and they need to start making money, and they need to start making money real soon.
Right, and I think, he's taking us down that road. He's made it very clear that that's where he wants to go. And he's even showed us, right, in certain, you can see it in expos, you can see it in conferences, whatever. He brings out the robots, they talk about it. I think it is the future. I think he's going to bring it there. Look, Elon Musk doesn't promise and not deliver. He promises and he delivers. And so it's a matter of time of, converting that manufacturing from cars to these robots. But I suspect that it's going to be very exciting, and I suspect that he's going to do it, and he's going to do it in a big way.
Now, let me lean into your balance sheet analysis skill set. We were just listening to you talk about free cash flow on Microsoft. When Elon Musk hops on an earnings call and drops this mini bomb on everyone saying, we want to build TerraFab, essentially a big giant building that makes computer chips to fund his various ambitions on robotaxis and humanoids. Do you want to hear that from an investing standpoint? Because that is going to suck up free cash flow, and that could impact the stock's valuation.
So Tesla has never traded like a normal stock in terms of valuing it on free cash flow or earnings or any kind of traditional measure. So on the one hand, yes, as an investor, that bothers me because that's a very expensive proposition. On the other hand, as a stock investor, I don't know that that's actually going to end up mattering to Tesla's valuation and how the stock trades. It's like a number of other companies where the free cash flow has never really mattered to investors, at least based on the stock price. But that said, fabs are really expensive. And we don't have the infrastructure to build them here in the United States in the same way that Tesla's talking about. So, for example, I was looking at the Lam Research Quarter last night. They're a semi-cap equipment company. And they're global, right? They sell to Korea, they sell to Taiwan, they sell to the US. They're dominant in their etch and deposition subsector. They had 5% of revenues from the US, okay? 20-30% from China, Korea, Taiwan. And so unless we see the infrastructure being built out in the US to support fab growth, right? It's not just the fabs, it's all the components, all the suppliers, all the labor. It's going to be really hard for Tesla to build a mega fab in a way that's going to be profitable, that's going to have the yields that they need, that is going to generate the long-term free cash flow. So he can build it. Maybe investors won't care about the free cash flow because historically they haven't. But I think there's also a bigger question about whether or not that can really be successful, given what we see about semiconductor capacity build-outs in the U.S. right now.
And as real quick, do you view Tesla as a car company?
No, I mean, it's now autonomous. It is about robo-taxis, and it is about, it's about their Optimus. I mean, he's made it super clear about that and how it will change. I mean, the future is autonomous. And if I were an Uber driver right now, I'd be shaking in my boots because they see the vast majority of miles being autonomous.
Well, we're glad you're not an Uber driver, Inez, because we need you on this roundtable. And before I go, big moment for Yahoo Finance. We have launched our Poly Markets hub right on Yahoo Finance. It's an amazing site. I was scrolling through this, guys, this morning, and one prediction area caught my attention is who do people think will be the largest tech company by the end of June? Let's toss that up on the screen. It was pretty fascinating. Kenny, it's a battle between the likes of NVIDIA, Google, and some other big cap tech names. Who do you think is best situated to be the largest tech company? Is it still NVIDIA moving forward?
NVIDIA's right up there. I am going to go with NVIDIA. If it's Microsoft, Alphabet, if that's what we're looking at, I'm going to go with NVIDIA.
Ellen, another one I was just briefly scanning this morning was who will have the best model by the end of January. I mean, of course, it's almost done because January is almost done. But Google, 100% of people think that Google will have the best model in the market. And I hear what Kenny's saying, but Google's making a strong case to at least, if they don't make it to June, end this year as the world's biggest company.
I think Alphabet has a really good shot at getting that because they have a much less capital-intensive model than NVIDIA, even though they still are spending a lot of capital, but they are able to grow advertising. They're able to catch up with OpenAI when people thought they were left for dead a year ago. So I would go with Google on this one.
And as I assume you're coming in here with NVIDIA.
Hands down, Alphabet.
Wow.
Definitely.
Okay.
Yeah.
Okay. All right.
They've got YouTube, they've got the ads, they've got Gemini, they have all of those, as was just mentioned.
And as you're always full of surprises. I appreciate you all. Amazing analysis on a big morning for earnings. You are all the best. Be sure to check out Yahoo Finance' new Prediction Markets Hub, powered by Poly Markets. Scan the QR code on your screen for more. It's a really great destination. Love it. As much as I want to make my next segment about the Super Bowl being played at Levi's Stadium, I have to stay in character and slice and dice another earnings report. This one is from none other than, wait for it, Levi's. Levi's Chief Financial and Growth Officer Harman Singh isn't coming to us from the field this morning. At least I don't think so, but he is coming up next for a chat. Don't go anywhere. solid is my takeaway on the earnings report out of Denim King Levi's. Quarterly earnings beat estimates, which is always good to see. The initial 2026 sales outlook was above estimates, also good to see. And it looks like holiday sales momentum has carried over into the first quarter, also good to see. But a few things caught my eye. U.S. sales on a reported basis fell 7% and were flat on an organic basis. And the full year earnings guidance range was below some consensus estimates out there. Harmeet Singh, Levi's Chief Financial and Growth Officer, is here for my Power Player block to get into all of this. Harmeet, my friend, good to see you here. And I'm inspired a little bit about the big game coming up here at Levi's. I'm thinking about all the trash talk that happens on the field. Can you declare that you all have won the denim wars? Sorry, American Eagle, we see what you're doing on out there. Gap, your quarters are cute. We have won these wars.
Yes, we have, and we're getting started as we make this conversion to more of a denim lifestyle company. So just talking a little bit about the year, Brian. 25 was what I call a turning point in the company. We accelerated our revenue growth. We accelerated our profitability, delivering 7% organic growth for the year, establishing us firmly as a mid-single-digit growth company. Higher EBIT margins, record gross margins, and high single-digit EPS growth. The transformation of the company into a denim lifestyle and a DTC-first company is successful. DTC now represents 50% of the company and has delivered another trifecta, which is positive comp sales, higher EBIT margins, and importantly, opening more stores. And the denim lifestyle is the transformation as we expand our addressable market. We are now into non-denim. We're selling skirts and dresses. We have entered the pinnacle category by the launch of Blue Tab. So if you think of our 7% growth, a third of that growth is through the expansion of our TAM. And to your point about establishing ourselves firmly, we are number one in men's, women's, and the youth for the first time in decades in the U.S. And globally, obviously, we're leading both the denim category and the expansion, across both men's and women's. So let me pause there, but hopefully that answers your question.
Of course it does. Harmeet, if anyone can measure this one, it's going to be you. As you look back over the past 12 months, the performance you put up, which was rock solid, how much of it because of the Beyonce campaign, which was very successful? And then in the same vein, how do you replicate that success this year?
Yeah, no, the brand's having a moment. I think we're probably the strongest we've been in decades. And as a company, both operationally and financially, I would say, we're at a stage where we can take it to the next level. To your question about Beyonce, the partnership has been very, very successful. We leaned in because we're really focused on growing our women's business, and she really helped us resonate and connect with our consumer. Clear evidence, our women's business, which is now more than double what it was a couple of years ago, is close to $2.5 billion, grew 11%. And, we're leading with product innovation across different tiers. And our view is the women's business, which is a little under 40% of our business, should be headed to be at, closer to 50%. And the gross margins are accretive to the company. So last year was about, music, leading with Beyonce. We signed up Sabuze. We've got influencers around the world. Alia Bhatt in India, Diljit Dosanjh in India as an example. This year, it's all about music, sports, and connecting better with the youth. And that's where we're debuting at the big game, our Super Bowl ad, which is the beginning of a global campaign that will last through the year. And that's what we believe, Brian, continues to build momentum on top of momentum. And that's why our guidance for the year, again, was in the mid-single digit growth, 4 to 5%, which laps a 7% year. The category is accelerating. We are growing at twice the pace of the category, again, establishing a market leadership position that you talked about.
You mentioned the Super Bowl marketing. First ad, 20 years for Levi's? It makes sense you would do it at Levi's Stadium, so I hear you. I mean, that's not a cheap ad. How much does that cost?
Yeah, I'm not going to get into the dollars, Brian, but what I will tell you that the ROI on our marketing investments is really paying back. I mean, I'm a big supporter of the marketing that our CMO, Kenny, brings to the table. And I'm being the growth officer. I do believe it drives and accelerates growth. Importantly, it pays back. And we're seeing that in our EBIT margins. Next year, for example, we have guided that our EBIT margins will continue to expand, as we set up the pathway to get to 15% operating margins over time. And importantly, it accelerates revenue growth and expands our addressable market. So I'm a big believer in what is currently being on the plate for marketing for 2026. And as I said earlier, the brand's never been stronger.
I mean, everyone that I've talked to, let's say over the past month, have reminded me we're getting ready to go into potentially very large tax refund season to the extent we have not seen in some time because of the Trump administration's one big beautiful bill. If I have this right, you did not bake this into your quarterly guidance. Why not? And how do you expect these refunds to impact the denim market?
Yeah, overall, so yes, you're right. We didn't bake it into our guidance. It's difficult to predict. And it's always important to, as you guide, to go in with, perspective that you can beat this over time. And that's the way we're thinking about, our guidance. That's how we have thought about guidance over the last, 5 quarters, etc. But, to your question, the consumer in the U.S. has been strong, very resilient, responding very well, especially to newness and product innovation. That's what happened during the holiday period. For example, November and December, which is what we call December, was up 7% and really builds the momentum as we enter 2026. And so, as the refunds take place, the consumer is strong. We're leading with innovation. We'll have some great marketing. I think all that will build and demonstrate progress in the company as we continue to accelerate growth and profitability. Because there's a relentless focus on driving cost management and ensuring that we continue to expand EBIT margins.
Army, when the Patriots win the Super Bowl, are they going to get one of those Super Bowl jackets you're wearing presented by you and your CEO?
Yeah, just stay tuned, Brian. And we've got two great teams playing in a wonderful stadium that is named Levi's. And so it's a wonderful opportunity for us to demonstrate and leverage our brand. And obviously, stay tuned for the Super Bowl ad, which we're debuting after 2 decades.
You got a pick? You got a pick here? I'm asking everyone.
I'm going to decide on game day.
Oh, I knew that was kind of
the two great teams. The two great teams. I wish the 49ers were there, but the two great teams is going to be a great game, and it's in a wonderful stadium.
All right, thanks, Harvey. Enjoy that big game, and looking forward to talking to you again soon. We'll talk to you later.
Thanks, Brian. All right. Take care.
A final thought before you go. This has been a week of major corporate layoff news. And the week isn't even over yet. If these sackings don't partially reflect the growing impact of AI inside large companies, well, then maybe I am badly misreading the tea leaves. But I don't think I am. UPS says it will send 30,000 people packing this year. They are calling this a voluntary buyout. Essentially, that's HR speak for you're fired. Amazon is letting go of 16,000 more people. That must include a team that oversees the checkout palm scanners at Whole Foods. I love using this thing, but got an email this week. They will no longer be in use come June. I'm very sad about that. And Home Depot said it will let go of 800 corporate workers and demand those that remain come back to the office 5 days a week. Great way to thin the ranks. Put in an RTO plan. Have a great day. Julie Hyman is up next on Market Catalyst.
Welcome to Market Catalyst. I'm Julie Hyman, and we are 30 minutes into U.S. trading day, so let's get to the three market catalysts we're watching this hour. First up, full earnings coverage on Meta and Microsoft as the tech giants spend big on AI. And speaking of spending, we're going to break down Tesla's results and where the company is looking to unleash $20 billion in CapEx. Plus, President Trump lashes out at the Fed after keeping rates on pause. We'll have more on the decision, the future of rates, and the next Fed chief. Taking a look at the major averages right now, we have an interesting divergence happening today. It's not that everything isn't down. It is, but it's the magnitude with which it's down. So, for example, the Dow here is down about 104 points. That's only about 0.25%. The S&P 500, though, is down 0.7%, and the NASDAQ is down 1.5%. And it all has to do with how things are weighted. So let's take a look at what's going on in the NASDAQ 100 to get a little bit more insight into this. So basically, you have a couple things to blame here. Mostly Microsoft, which obviously has a large weighting within the NASDAQ 100 and the NASDAQ Composite, and is down 11.5%. We're going to dig into why in just a moment. Counterbalancing that, but not really, is Meta, which is up 8.5%. But you see a lot of other red on your screen here. Alphabet, for example, is down more than 2%. Palantir taking a hit of 5%. Intuit, I see in dark red here, down 7%. Adobe, Synopsys, Palo Alto. So there's a lot of sort of dark red on the screen here that, along with Microsoft, is sort of weighing on what's going on in the NASDAQ in particular. Sector-wise, tech is the worst performing group, but it's the only group that is underperforming the average. In other words, you've got a lot of green on your screen today. Energy stocks are rising along with oil prices. Communication services, because, by the way, that includes Meta, is at a new record today. This ETF XLC. Industrials are rising. So really, this is a tale of tech pulling down the overall market. Just a couple other quick things I want to check on outside of stocks that bear mentioning, and then we're going to dig into a little bit more later in the show. First of all, there's what's going on with the US dollar, which continues to decline here. At the same time, as we have currencies lower, we've got commodities higher. So oil prices pushing up today by more than 4%. $66 a barrel is where you see WTI. Gold futures continuing to just rip higher. They early were above 5,500, now pushing back below that level, and silver is joining right along with it. We see copper prices also much, much higher. So we're going to talk about metals a little bit later. But right now we got to pivot back to Microsoft, because those shares, as I pointed out, are falling sharply by more than 11% as the company's CapEx spending plans spook investors, despite the fact they topped second quarter earnings estimates. Joining me now is Rishi Jaluria, RBC Capital Markets Managing Director of Software. Rishi, it's good to see you. And hopefully you can sort of walk us through what's going on here, because I find it really interesting that sometimes investors hate more spending and sometimes they don't. Meta is an example of where they don't hate it today. Microsoft is an example where it is seemingly more alarming. Is it just because, like, Azure is missed maybe some estimates? What's going on here?
Yeah, and thanks so much. Always a pleasure to be on your show. Look, I would say there's a couple things going on, and it's interesting you bring up the Meta comparison, because 90 days ago everyone hated Meta's capex plans, but obviously they had a strong quarter, and you see that being reflected in their stock action today. With Microsoft, candidly, it feels like I'm missing the forest for the trees type of moment. Absolutely, people are picking on the capex numbers. The capex numbers are actually pretty in line with my expectations, but definitely above where I think the rest of the street was. And Microsoft has been telling us for a while now that they are capacity constrained, that they want to bring all this third-party capacity. Think about these deals they have with Oracle, CoreWeave, Nebius. They want to bring all of that back in-house. That means that's a lot more they need to spend to build out that capacity. And they're telling us that effectively the Azure numbers would have been meaningfully higher if not for the capacity constraints that they're facing. And so, it's almost like Microsoft's kind of stuck from an investor sentiment standpoint in the middle, where, look, the Azure number I thought was strong, right? I mean, you could say, oh, it wasn't 39%, it was 38% in constant currency. But the fact is they added somewhere in the neighborhood of $9 billion of constant currency Azure ARR sequentially. And it was a broad-based beat. It wasn't just OpenAI, or it wasn't just AI, it was everywhere in the portfolio. And there's a lot more to talk about the print. But, maybe it wasn't necessarily high enough for people that wanted a higher number, and the CapEx numbers are going up. You don't
spend money on CapEx and build out data centers and immediately have that translate to revenue. These things take time to translate. I think it's creating a buying opportunity in this increasingly fickle and impatient market.
Well, let's dig into this timeline a little bit more, Rishi, because you wrote about this in your note as well. You know, this problem of these capacity constraints. So if capacity is a problem, how long? I mean, it takes a long time to build out capacity, especially if they're building some of these data centers from the ground up as opposed to acquiring or what have you. Like, what does the strategy look like there for Microsoft, and how long until they can expand that capacity?
Yeah, look, I think they can start to expand capacity slowly right away, and we start to see more 1P capacity come online. And you know, I think Microsoft has a multifaceted strategy to be able to meet demand. There is the getting of new, building of new data centers, owning those, and those have ROI for a very, very, very long period of time, which is great. Because with Microsoft, you want fungible architecture that can be repurposed from training to inferencing, reasoning, post-training, etc. They're also doing third-party leases. They're also doing third-party data centers. So anything that they can to bring more capacity online, they are doing that. Now the question becomes, well, when can they hit a point of parity in which they are no longer capacity constrained? You know, look, it's not going to happen until at least the end of their fiscal year, which is June fiscal year end. It could be after that. It just depends on the rate of AI demand. And look, I mean, clearly we're dealing with unprecedented AI demand, given the arms race going on between the model providers. But you're also seeing this uptick in enterprise AI demand. And I think that's what got lost in the noise around Microsoft's print, is a lot of the data points they gave us, be it Fabric, GitHub Copilot, M365 Copilot, we're strongly encouraging that we're starting to see the AI tailwinds not just be about brute force trading of models and capacity build-outs, but there's actual enterprise adoption. And I think that's what's needed for this kind of AI trend, today's stock market action notwithstanding, to really continue, and for that all-important moment that everyone's waiting for when we start to see that kind of rotation from semis into software.
Rishi, I did think that was, I mean, some of the data points that you brought up I thought were really interesting. That 15 million subscriptions for M365 Copilot, the contribution from OpenAI to net income of $7.6 billion was also interesting. I'm curious, as they give us sort of this transparency, if there's anything else that you want from Microsoft in terms of data. Are there other questions that you have about as they sort of shift the business model that would help you kind of analyze the company?
Yeah, look, I think what could really help us is, it's good to get some of these paid user numbers. And one metric, by the way, that really stood out to me in addition to the M365 Copilot number was Microsoft Fabric reaching $2 billion of ARR, up 60%. Bear in mind, they launched that product less than 2 years ago. So I think that's a very, very impressive trajectory we're seeing there and showing the kind of strength and breadth of Microsoft's portfolio. What I really want to see, though, are some really strong user engagement, user value metrics, because there's always going to be new fears that pop up. Now it's people asking about Anthropic Claude Cowork, but really I think if we can start to see data points of users are spending more time and engaging more with the Office suite because of M365 Copilot and all these AI-enabled features, that more developers are spending more time putting more code in GitHub because of GitHub Copilot. If we start to see that, I think that's a great leading indicator for future monetization, because really, the way we think about AI monetization in software is innovation, utilization, monetization. And so I would love to see more of those forward-looking indicators, but I do appreciate the greater transparency that Microsoft is giving us now.
Rishi, on the point about OpenAI, they gave that net income contribution number. It seems like even without that, they would have beat estimates. That said, it seems like there is some concern out there about how leveraged they are to OpenAI, the relationship with OpenAI. Is it a liability or is it a benefit?
I think it's actually a strength. Look, I think the more important number that's coming out is that OpenAI represents 45% of commercial RPO. That's basically a measure of think about that forward-looking backlog. Now, I think that's a conservative number because they are kind of risk adjusting it, especially on a duration impact. But I think two things are really important here. Number one, OpenAI is still, for all of the kind of gains that Anthropic and Google with Gemini have made in 2025, OpenAI is still also at the cutting edge of this, right? I think it's candidly a three-horse race and it's an oligopoly between these three model providers. And Microsoft still has research rights till 2028. They have IP rights until 2032, which includes AGI, and that means, by the way, no gross margin drag. They have API access. So I actually think that OpenAI relationship is a huge strength for them. But the second thing that I would say that I think gets missed a lot is when we think about all these applications that they built, be it M365 Copilot, GitHub Copilot, Dynamics, security, etc., they're all built in a modular fashion. That means they're model agnostic or actually multi-model in nature. So you can choose to use OpenAI or Anthropic or even open source, be it Mistral or Llama under the hood of these. And so the future fortunes of them at the application layer and the developer layer, the security layer, are not dependent on OpenAI. It's dependent on AI as technology and these models evolving. And I think that gets missed is Microsoft has built these products in such a way to hedge their bets that, even though obviously OpenAI doing well would be a good outcome for Microsoft, the future of Microsoft is not entirely dependent on OpenAI.
Richie, I wanted to broaden it out a little bit, and I want to play for you something that Kim Forrest of Bouquet Partners told Josh Lipton, who you know well. He asked her how software businesses navigate this LLM future, because as you know, many of them have been underperforming, and I want to play for you what she said.
Well, I think people really are leery of things like Salesforce that have been growing because they've been adding functionality. And now people think, well, you could just, use Claude and write whatever you want. Well, as an ex-software engineer, good luck with that. I think it can help people write code, but I'm always kind of skeptical about that.
And so I wanted to get your take on that, Richie. This sort of a, cavalier assumption that, we don't need these enterprise software companies anymore because people are just going to apply code at everything.
Yeah, no, I fully agree with what she's saying. Look, I would say this is, yes, barriers to entry in software have come down. You and I can probably create a software product that's a minimum viable product, get it out in the market with
Market open after 12.
And I'm not a software engineer by trade myself.
Well, guys.
But I think this is a great thing. It means the software team
That's that.
means more innovation, and more innovation means more customer success, and that means a larger TAM that we can go after. And so I
That is that. There's nothing else really going on.
Where I think it creates a little bit of pressure.
We might be
on
back
something like
later on.
Is the ability to upsell new products.
We may be back later on before market close. I doubt it, but it's possible. Something crazy goes on. So, go watch one of our other videos. There's plenty of good ones. Go check out a cool video I made last night. I'm just driving around at night in Charleston, South Carolina. It's a beautiful video. Y'all have a good day. Thanks for watching. And never risk more than you're willing to lose.